Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for June 30th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What we were looking for recently was how price was going to respond off the previous week's low. I mentioned that if there was any rejection of prices below the previous week's low, we'd likely see a move back to value here between 44 and 52, and we saw that transpire over the past 2 days. Now we've seen a push even through our highest target yesterday, which was the 59.60 zone. It continued through there, reaching much higher heights. We obviously have price pulling back and already being defended on the pullback in pre-market and overnight trading as price begins to form a digestion range at highs, basically digesting the recent move. What we could see here, obviously, we talked about before, we had this expanding range here. That expanding range helped us identify that we could be seeing new highs that are rejected, new lows that are rejected, etc. And recently, we've already come mostly all the way back up. Going back to highs would not be out of the question, very similar to what we did with gold. And then we could see perhaps another return to value. But right now, heading into an extended holiday weekend here in the US, July 4th weekend coming up, etc. It makes more sense that after trading both edges of the range, that price would likely just trade and hold within value. However, we have to find the high, and if we have found the recent high, or if we get into 2082, this VAH, we could see a move right back. But it makes more sense to trade and chop right where everybody wants to trade it here, between 2040 and 2065, basically, or 2070 and 2020. Somewhere in that zone, chop in there until we're ready to move. If we take a look here at the intraday time frame for a moment, we have a trading range day, a flat VWAP here. You can pull up your PivotBoss bands if you have them here, showing standard deviation of VWAP. And basically, the idea is to fade the edges, fade new highs, fade new lows until proven otherwise. So fading the edges of the range and returning price back to VWAP, fading the edge of the range and returning price back to value. So that's the early idea there until proven otherwise. Bulls right now are defending pullbacks up to the 2052 level, which is a composite VPOC, 4 shot higher. This 2074 is FOMC. That's the FOMC level from 615. That's a very important level. So right now it is the pivot to watch. Above that level could squeeze higher into the previous month's close and the primary upside target at 2086. All right, let's take a look at crude oil. Here's crude oil. One thing we mentioned with crude oil was the fact that we were rejecting below the key range low, which is actually 46.40. Implied a move back to 49.40. We talked about that pre-market yesterday as well, and running the stops through the LVN back above 48.780, 95s or 48 evens. Those buy stops really help fuel this move up right into value as well at 49.78. So we've gotten a nice clean move again, very similar to what we just saw with the ES, right? Rejecting at the edges to go back to a high volume node, and perhaps chopping that node as we head into the holiday session, the holiday extended weekend. So we could be looking at further trading range action between 50, 54, and 48s as we head into the holiday weekend. If we take a look at the intraday time frame for crude right now, what you'll see is kind of an absorption signature forming on highs. Price rallied into the CHBN that we talked about here at 49.78, rallied through it and hit 50 evens. 50 evens has been a big time level pivot here lately, and that was offered significantly into the close. And in overnight trading, there's been an absorption signature here off the 49.50s, the 49.60s, where passive sellers are defending this area, absorbing all the buy side right there, and the hope is to run the downside sell stop. So right now you have a very big time key level here as this thing works its way downward. I think if this thing's going to continue pushing downward, the primary bear target for the day is 48.12. So that's about the spot here that makes a lot of sense for price to return to in terms of a high probability area, especially given that key range low and recent supports also in that zone. So this makes a lot of sense. Below that area opens up 5-day VPOC at 47.60. So right now, big time absorption happening here, and we could see this thing linger lower. All right, let's take a look now at gold futures. This one will be quick because it's basically the same thing I mentioned yesterday with pre-market. We're trading 1340 to about 1310s, and that range right now is a very clear trading range. One thing that is happening is it is coiling up, so you could get an advance notice here on if we're breaking up from that coiled up range. So right now the idea is that the recent rejection up on these highs and then the lower absorption implies a return back to value. We have 12.99 here, we have 12.60 as the center of the key range, and we have 12.38.5 as composite VPOC. Those are all high probability areas should the sell stops get run below 1305s. So that's something to keep in mind. If we take a look at the intraday time frame of gold, you'll see that it is mostly trading sideways. We can go up in time frame here, and you can see the absorption that I mentioned before. So a rejection here, and right off this zone 1340, you're seeing absorption, absorption, absorption. The idea is that the bulls that are defending here will get exhausted, and eventually the downside sell stops through 1305s will trigger, and you'll see a return lower. That doesn't mean we can't break up above 1340. Opens up a continuation likely to new highs with targets at 1359.9 and 1372.9. Those are the weekly targets. All right, let's take a look at the NQ now. Lastly, this one here also bounced from lows. We began the week, our pre-market and also in the trading room, we talked about watching the previous week's lows this week. That was going to give us an indication here on if we were going to squeeze. And we saw some significant absorption on these lows, box reversals across the board, NQ and ES, and that led to a multi-day squeeze. And so far we continue to push higher. Here's value, 43.89.5, so we still have another level to go here. But very similar to what I mentioned with the others, if we get to value here, we may come a little higher, maybe 44.12s, but it could just come back and now trade in this range here as we head into the extended holiday weekend. Obviously, given the recent price structure, one thing that's very apparent here, you can see we have the nice new key range, but one thing's apparent is that now, let's take off these weekly levels. What we have is this price structure right here has begun to violate to the downside now from that nice, well-established price structure with lower highs as well. You can see a high here, then lower high, now lower high, with new lows along the way. So this is something very significant here. Once we come out of the holiday weekend, we need to see how price is going to respond at the rejection level at 44.34, because if price comes into that zone and can't go above it, that could be an opportunity to sell it for the next swing or position move downward, because we could be heading back toward 38.50 in July, August, as we're now in the last day of June. So something to keep in mind. Looking at the NQ finally here, big time rally. Here's the squeeze that I talked about before. Right here, a box reversal where it couldn't go, and then it broke it to the upside. Major squeeze. We also have a digestion happening on these highs where prices is starting to trade in a range here. It's a fade new highs, fade new lows type of day. So again, above 43.75, look to return it to value. Down below 43.35, look to return it back up, and look to fade throughout the day until proven otherwise. Should price break further to the upside here, we have 43.89.5, and our primary upside target for the day is 44.07, with 44.30 being the secondary target above. Remember that 44.34 is about as high as we can go before we start to see rejection back toward value. In this case, a 5-day value would be 43.18s. All right, that's it for now. Let's see how this thing plays out today, this last day of June. Good luck, trade well, and I'll see you soon.